Thank you. I'm actually hoping to learn a lot from this panel because it seems like I'm the baby of the group in terms of experience for sure. So there's a kind of a snarky title to this session, Why We're Not Investing in Your Studio. I think when the panel came about, one of the things that we really wanted to do today was to make sure that a lot of the things that we see over and over as investors, making sure you understand what those things are, because there are common themes that we all see as investors in game studios, and this is sort of across geos, different cycles of investment, and there's a lot of sort of easy wins I think to be had for developers out there talking to investors. And so while it's a little bit of a snarky title, really the idea is that we all walk away with some key learnings here. I'm going to let each panelist introduce themselves. So we have Paul, Phil, Clinton, Gigi at the end, right? And Klaas. Now Klaas is you're wearing your angel investor hat today, right? Not your publishing hat. Is that correct?
Both, I guess.
Okay. Well, why don't you start since I put you on the spot there?
Okay, fair enough. Hi, I'm Klaas. I'm in gaming since 2002 professionally, and since I can remember from a consumer point of view. In a former life, I founded Gameforge and brought it to around 650 employees and around 150 million in annual revenue. Left the company in 2010, built a mobile games publisher called flaregames. You probably noticed our latest release, Nonstop Night and Olympus Rising. They are on the badges as well. On the side, I'm an angel investor in several gaming companies across all genres and platforms. The most prominent one in the past probably being Supercell. And yeah, from a publisher's point of view, I'm investing in companies as well when we sign deal on a burn rate deal basis, but we are doing equity investments as well.
Great. Gigi, you want to go next?
Yeah, sure. So I'm Gigi Levy, Weiss. Today I have an accelerator in Silicon Valley in Palo Alto, but on the game side, I've invested over the years in some 20 games companies, mostly out of Israel, but not only. The ones you guys probably know, I founded Playtika. I was the first investor, actually the only investor in Plarium. I was the first investor in Space Ape. I founded Rising Tide that we sold to Zynga. House of Fun that I sold then to Playtika after we sold Playtika. And 3 more companies that I sold. So it was, most of my investments are in other fields, but the ones that make the money, that allows me to lose money on the other things, are the games ones. And so I just got to continue doing them, but there's no other way.
Hi everyone, my name's Clinton Foy, and I'm Managing Director at CrossCut Ventures. I'm also founder and chairman of the esports franchise, the Immortals. Immortals is an esports team that's killing it in Riot Games right now. We're ranked number 2 in North America, number 7 in the world. We also have a Counter-Strike team that's top 5, top 10 in the world. So I don't know if you guys can pick that up, but I'm kind of a game nerd. I've loved games since like 1980 when I first played Space Invaders at a Shakey's Pizza. And I also had a career as an operator at Square Enix, where I was the COO for all of North America, South America, Europe. And right now I help to run a venture capital fund that's based out of Venice in Los Angeles. We invest in games, we invest in game platforms, so I've invested in the first round in Super Evil Megacorp, Vainglory, Mob Crush, Vulcan, Twitch Alerts, and a bunch of other esports companies also looking at VR.
My name is Phil Sanderson. I'm a managing director at IDG Ventures. I've been in venture capital for 20 years. I've been in game finance since 1993, worked on the investment banking side and then focused on investing in game companies. I do a lot of music technology companies and SaaS companies as well. Primarily do seed and Series A investing, and currently have 14 gaming companies in my portfolio. Invested in Funzio, Telltale Games, Discord, and a host of others that we can touch on.
Great. Paul Martino. I started my gaming career on the bulletin board networks. I had one of the most prolific gaming companies back in those days, 89, 90. Those were fun days. I wish they would come back. Much more recently, though, I run a fund called Bullpen Capital. As an angel investor, I was the original syndicate investor with Mark Pincus and Zynga. I started Tribe with him previously in my prior life. At Bullpen, we do quite a bit of gaming, but not probably the stuff that overlaps with this audience as much. A lot of our stuff ends up being real money stuff. So, for example, we're in Jump Ramp Games, which is a sweepstakes mechanic. We're in FanDuel, the fantasy sports company. We are in a couple more traditional gaming-oriented infrastructure-type plays. But if anything involves the real money aspects of this, that's what I would describe as the strength of our expertise in your category.
All right, so I wasn't lying. There were some heavy hitters on the panel with lots of information to share. For my part, we've only been around Execution Labs for about 4 years now. We've made about 24 investments in game studios. We only invest in game studios. But just like everyone else on the panel, and if you were here for Sean's talk before, you heard that we say no most of the time. And it's not because we want to say no most of the time. We have money to deploy. We want to deploy it. But I'll start off, I'll throw something out there, and then I'll let these guys jump in. So I'll be the bad guy first. One of the things that I see, and I'm sure that you guys see it all the time, is that game developers specifically have, sometimes there's a disconnect between what they're building and who they're pitching, meaning game developers have sort of a tendency to pitch investors, financial investors like us, as if we were publishers. And Klaas, maybe this is something you'll be able to jump on as well, but there's a very big difference in the way financial investors look at game studios. So if you're pitching a publisher, right, you should know that you can pitch this great game that you have, right? And if they think there's a chance that this game can make money and they can make a margin on that game, they're often more than willing to fund that project and, of course, recoup and all that other stuff. But when you're pitching a financial investor, you have to understand that for the most part, we're interested in that game only to the extent that it helps you build your studio long term, right? We're not going to make money directly from that project. We're going to make money from when your studio exits, years down the road, right? And most game developers don't make that distinction. So the pitch that comes to us oftentimes is, hey, I had this cool Space Marines game, what do you think? And we often can't do anything with it. Klaas, maybe you want to jump in there because you sort of worn both hats. And
actually, what I observed over the last years, especially for what we at flaregames are doing, is that those two perspectives overlap to a certain extent. In the past, when it was more about shipping boxes or bringing one game out, it was a lot about the actual product, but what we, from a publisher's perspective, now look at is mostly the team and their ability to grow over time and repeatedly achieve great titles and produce great games. So we are never in it for the short term, like we are doing one product together, but it's always like with options on future works, on sequels, on derivative works, and we really want to build like relationships that last for years in the best case scenario. It's part of our strategy to eventually buy the studios that we work with if it works out great with them. And so the two perspectives actually become one, at least from my perspective.
Let me give you one potential cheat sheet for this. To the extent your game is evergreen, you're going to find financial investors like me way more interested than if it is hit-driven. So if you look at the stuff that's in my portfolio, it's Zynga and FanDuel and Jump Ramp Games. What do they all have in common? They're hit titles, and in the case of Zynga, it's poker. These are evergreen titles in which every year when you do your fantasy sports draft, you're going to go back to FanDuel and you're going to play. And so when someone comes in and says, Paul, you do a lot of game stuff, and they pitch me on Space Invaders 27, mid-core, high-core, I never know what those words mean, I'm going to say no because I don't know how to invest in kind of an IP-based title that's around a hit. And I think this is the distinction that might be useful for the people in the audience to kind of get their heads around. It's not hard and fast, but that's probably a good cheat sheet.
Fully agree.
And it doesn't, I mean, you could still do it off of IP-based hits as well, but a different riff on this, a sort of a continuation, is finding a platform that you can use to be able to create games off of. Like with Telltale Games, they do IP-driven games, but the engine is their own. They're able to take the IP, put it into the engine, and produce some games very inexpensively. So I think that, I mean, the best example in the industry is probably Supercell, because it's not just Clash of Clans. It's a very similar model to do Boom Beach, Heyday, Clash Royale, and so forth, to be able to produce multiple games. So I think the theme is the same. You may have one game that you're trying to develop or create success with, but we're looking for a long-term platform or strategy that you can, you know, either through an evergreen game or a platform approach to do multiple games off of.
I'll take a bit of a different approach when it comes to publisher pitching versus investor pitching, and that is that today, sadly, it's not enough to just build a great game. So when we look as investors, when I look as an investor at a studio, I know that the fact that there's the guy with the talent that can bring the magic dust, the fairy dust, and make the game great, if there's not the other guy that can build the tech and the other guy that can market it in today's horrible acquisition market, and another guy that can do the live ops if required, then the fact that the talented guy can build the game means nothing. And so when you come to a publisher, truly you're expecting the publisher to do a lot of that, and that's okay. When you come to an investor, the investors today are very unlikely to just follow the dream, to just follow the great game talent. So I still get people that come to me with great graphics and great storybooks, and I look at them and say, well, these are amazing, but how do you make money out of that? How are you going to get customers? Because it's no longer the days where you just put a great game out and that's enough. And so, you got to think about your entire team. You've got to think about how this entire team basically creates together a successful games company, which is around the core talent, but it's around it and it supplements it. It can't just be just the core game talent.
Another thing that we say no to studios for a lot is sort of not understanding the stage at which we invest. We are very early stage investors. We write checks that are a few $100,000, right? We're not late stage investors, and I don't know if most people or a lot of people who are out there finding funding sort of make the distinction between early stage investors and growth investors. I think, Phil, maybe you're the one maybe has done a few more slightly later stage. Maybe you can talk about what those economics look like a little bit.
Yeah, so we do a number of seed investing and have done a lot of seed investing in gaming, but we'll also look at gaming companies that have valuations of $1 billion and so forth, just because we have a $100 million fund and series of funds. In those types of scenarios, it's more venture capital 101. We look for a 2 to 3x return and a 3 to 5x return in a 2 to 3 year period for the late stage investing. When you do a seed investment, VCs and angel investors will expect to hold that investment for 8-9 years, which is typical. So, the economics are you need a really big return, 10 to 50 times your money return on the seed investment to be able to get an IRR of an internal rate of return of 30+%, given the rates that companies go out of business. Then I'm on the board of the National Venture Capital Association. The fallout rate of seed investments are 80%. 80% of seed investments go out of business. 40% of Series A investments go out of business. So if you factor that in, factor the time length and a return hurdle, seed investors look for a 10 to 50x return, or possibly better in the case of Supercell.
So I just want to reiterate that point. Seed investors are looking for at least a 10x return on their invested capital, right? So think about what that means if you're going to a financial investor and asking for $1 million to make your game, right?
There can be other reasons that we do seed investments also so that we can have the opportunity to lead the Series A. That's a big reason why a lot of VCs do seeds, such as us and Bullpen and others. And
I think, though,
CrossCut.
that one thing to supplement or give a different perspective from a fund is that one of the reasons people still do games investments, despite the end multiples being pretty shitty, right? So when you look at Supercell now, last deal, it's a 7 multiple. I mean, any horrible SaaS company gets 5 times that or whatever. So so it's really the end multiples are not very good. The reason why we investors keep doing that is that in many of these games companies, when you get it right, when you get the right team and everything goes well and it clicks, then you can do your 50 or 100 times really quickly, and many times with very little dilution along the way, right? So when I did Playtika, we sold the company after 8 months, and I made 195 times my money. That was nice, right? It's a nice deal for 8 months, and that was the fastest. But Plarium is not far from that. It's slightly longer, but not far from that. And when you look at it, there's no other industry in the world that can give you that. And so when you're pitching, you've got to basically go after people's imagination, right? You've got to basically let us think that what you have can be that. Because that's why we invest in games. We also love games, which is great. But we invest in games because I can look at all the SaaS investments I do or all my other investments, and I know that they're going to basically grow slowly. There's going to be more rounds. I'm going to get diluted. And by the time I see numbers in most cases, it's going to, it's going to be painful and long. And when I look at game companies, I kind of think, that's interesting. I can see that work. I can see that the top 25 game. Yeah, and the valuation's low. Bang, I do it. Despite knowing that if it ever gets to an IPO, it's probably going to get a shitty multiple, and it's probably going to be painful along the way, and the analysts are going to say that it's another Zynga or another King or whatever. But still, the opportunity is there. But you've got to build this dream. If you don't come with this dream, then it's going to be very difficult to convince people to invest in games.
One of the recurring themes that came up and people were sort of circulating their ideas for the talk was about how your team is presented, right? And so we get, because we're early stage investors and we're sort of very sort of indie friendly, we get a lot of amazing artists who pitch us. People who've been, I would say artists sort of in the general sense, I mean game developers, designers, actual artists, people who have been in the game business for 10 or 12, 15 years, and they pitch us with this idea for this game or the studio they're building, but what they don't do is explain how they're going to make the transition from folks who used to work at very well-funded publishers, well-funded developers, to a much more resource-constrained, small group. And it seems like a lot of people mentioned something about the team size. I'd love for you guys to jump on that one because it's something that sort of I rail about a lot. Team size and team composition and sort of not understanding or sort of not possessing the person or people who are going to help make that transition from a talented group of creators to people who are actually running a business.
I'll take a shot at that. So just to give you an idea, and I think maybe on the panel, we probably see a lot of deals. We see maybe 3,000 deals a year. Maybe 300 to 500 of them are game deals or game-related deals. And then we invest in maybe only about 10 of them a year. And in our case, maybe 3 of those will be game-related deals. So your chances, first of all, are just not really good, and it's kind of our job to say no. And then every once in a while, it's our job to take really unreasonable risk on some team. And then we're going to be married to that team for the next 5 to 10 years, possibly. So you have to really love that team and have a lot of faith in that team that they're going to kill it. And you're going to do everything you can with them to kill it and do really well. And so you start to develop pattern recognition for super high quality teams who are really motivated and aren't going to give up and are going to, I think, you know it when you see it. Justice Douglas said that when he was talking about porn. And I think you know that when you see it, when you talk to really super passionate entrepreneurs who aren't entrepreneurs, aren't in it because it's flavor of the month, but they're in it because they love it and they can't do anything else but that.
One of the things I always like to ask the entrepreneurs, and I even put it on the website, what are you uniquely qualified to do? I mean, to some extent, I want to be able to see people who have been there and done that before. Those are easier to identify, but the first timers, you kind of got to look at and go, okay, you're going to do this particular job at this company. Well, what makes you think that you are uniquely qualified to do this? Because to me, that's what the secret sauce is. And so I tend to be pretty willing to take a bet on an unproven team in these categories, provided I look at the backgrounds of the people and I can see that that puzzle makes sense. Yeah, so, even though you 3 are out of McKinsey, this actually makes sense that you're going to go do this game company. It's one of the companies we're in. It's all McKinsey people of all things. And I'll take one other slightly contrarian point of view to some of the panelists here. I have never once played a game of any company I've ever invested in. I take great pride in the fact that I've never used a product, I think, of any company I've ever invested in. And now, this is actually by design, not by being a Luddite. I find that the more that I can focus on things like the team dynamic and the unit economics and metrics, the less I can be fooled into falling in love with the game. Don't get me wrong, there's a lot of sell the passion and vision, but when I get the founder who comes in and all they want to do is show me the next screenshot, the next screenshot, the next screenshot, I get real nervous because that means the numbers aren't there if I got to see the next screenshot. And so being a more financial oriented guy, I have a slight bias that way that's probably different than most of the people on the panel.
I can see that to a certain extent. I mean, you detach yourself from the product itself because in the end, it's not about the product. The product is not what is worth anything. It's what they will produce eventually, and so it is the team. When you look at teams, I have like the two standard things that I have nightmares about. The first one being exactly those guys out of a proven publishing organization, and they have no clue what kind of work these organizations did around them that they are not even aware of. So that's kind of one of my first questions.
Why don't you talk a little bit more about that, right, to make sure that it's clear?
I mean, from the typical developer's point of view, and there are a few great examples that are not like that, marketing people know nothing about games, and they screw up with the vision all the time. And they ask for stuff that is completely unnecessary, and they don't understand the value add. And that's just one example of a lot of parts in a typical publishing organization where some of those senior teams come from, which they are not aware of. So their problem is they don't know what they don't know. And as long as they are aware of that fact, so that they don't know a lot of things and have to work around it and figure it out down the road, that's exactly how they should approach it. But people like, okay, we are coming from this organization, and now we are smaller, and we are going to do everything significantly better because all those people aren't interfering with us doing this real game. And I'm hearing this pitch like all the time. It's like a complete red flag. The other red flag that I see a lot of times is like a core team being there, but some key functions not being staffed. And then they are like, okay, we still have to hire this really senior lead coder that we need to finish this product. And it's always like, okay, but you are relying on something that you can't fully control, and if you are wrong on that hire, it fucks everything up. And so you at least have to add like 6 months to your schedule. Did you plan this in? And the answer is always no. And the difficulties of hiring qualified people that are really a good fit for the team and can contribute to the long-term value, it's usually not there.
I'm sorry, I'm still trying to wrap my head around investing in a game and never playing the game. No, and maybe it's the question, and I don't know if I'm speaking out of turn, but I mean, if you invest in Twitter, you've got to like play around on Twitter. If you invest in Snapchat, you've got to like intimately know it. If you're in Slack and investing in it, you probably have to try it to at least understand it, right?
I've never used a product of any company I've invested in, including the one Ipsy that I'm your co-investor in.
We were the first investors.
Yeah, I'm in the same round as you.
Yeah, so we were in that.
So, but like Marcelo showed up with he showed up with a $5 million back order when I met him. Yeah. I didn't need to play with the bag of cosmetics to figure out if I was going to invest in the company. As a matter of fact, if I played with the bag of cosmetics, that would probably have been a bad thing.
I played with it.
And by the way, I'm not saying that this is the only way to do it, but I'm saying to give you a truly contrarian point of view, there are investors who think the way I do, as opposed to just, I'm going to do it. There are multiple ways to win at the venture game. I use a divergent strategy than the rest of the panelists, but recognize you're going to meet people like me too, which is crazy. Hence why I wanted to kind of explain that.
Well, but you're going to meet very little people that are not going to play your game if you have a game to play with it and then invest. I mean, this is my take on it. Is very simple. I understand what you're saying, but I think you're going to be a 10 times better investor if you're going to play. That's my view.
Could be.
I mean, just
Phil's being suspiciously quiet. I don't know if that's because you ran 100 miles yesterday, or if that's true, or maybe the day before, I guess. But.
I did run 100 miles yesterday, and my legs are pretty sore. I did the Vermont 100 same weekend. Yeah. Congrats. I don't know. Look, you'll meet investors who have different approaches, and it goes across the board. I'll give one example. It's kind of fun. When I was investing in Funzio, the founder said, well, we're not raising money, and of course, you are raising money. And I started playing their game, and every time I'd email them, I wrote in my footer, I have like my name and my title, then I put my level, and it just kept going up. And I played the game like throughout the day, 6-7 times a day, and I would ping them and say, hey, I think one of your servers is down, it's causing this issue. And I just decided to go full out into the game and know it really well. And when it came time to choose an investor, and they were in the position of being able to choose, they said, you really understand what we do, and we want to have you involved in our company. So in that situation, they really wanted someone like that. However, if you've got a lot of experience, and entrepreneurs look for different things as well. They may want to fill out their board in a certain way, and finding a financial investor who knows their market can help them with a whole host of opportunities in terms of financing and bringing in co-investors and exit options and so forth. And that piece may be a different piece as well, but there's different pieces, different approaches. I think we've all had a lot of levels of success and have a different approach to it. And also, there's one classic rule in investing. It's like, you are not your target market. I mean, it's good to understand it, but like, I don't play MOBA games just because, it's hard to dedicate your life to that. I love casual games because I can handle that. But I don't play games that are targeted towards different demographics as well. So you have to be careful of falling into that trap too. That's an anecdote.
You've got to remember on the team side, so on one hand, we want the right startup people. On the other hand, you've got to understand what investors want. I mean, here's the deep secret, right? We want to invest in the company that's got the best numbers and it's already the most advanced at the lowest valuation we can. That's the entire secret, right? We want to invest in Supercell after launch of Clash of Clans at a $3 million valuation. That's our perfect deal. And so being that that's not available for most people, what's left is for us to try and reduce our risk in any way we can. And so we're constantly trying to balance what's the right people to run a startup and who are the people that can actually show us that they've done things before. And so when I get a team that wants to build an MMO strategy game, and I know that there's going to be very heavy on building the game economy and balancing it and knowing how to make it work, and there's nobody there that ever done anything like that, then it's going to be very difficult for me to assume that somebody that was an analyst in a bank can do that. Because the burden of learning is going to be so heavy that by the time they get it right, they've waited another year. So, you do want to have with you, when you build your team, when you build your story, you do want to have enough points that would make us think that you're less risky than the alternative investment. That's one thing. One more thing?
Yeah, please.
The second thing is that I think that over the last few years, I've seen a shift that's really been material for me in my investing, and that is that the type of people that have been successful with games companies have changed dramatically. Being that the games today, when I talk about mobile, but also many of the other things, they're a lot more focused on very high monetization, very high optimization of how much money you're getting for the customers, which ties immediately into how much money you can spend on acquiring customers. And this is a totally different paradigm than what we had in the past. What happens is that the people that become the best founders of game companies, they're people that are obsessed with numbers. They're obsessed with execution, which is very different than the people that were the best game entrepreneurs in the past. And so I'm seeing a big shift in what I invest, but in also what other people are investing, toward people that come and they know their shit. They know their numbers, they know their conversion matrices, they know their acquisition matrices, they know their LTVs, they know their ROIs. Doesn't mean that they don't think that the game should be amazing, but they're coming with that pounding approach toward execution, toward optimization, which is today, I think, for most genres in the top 100 games, is really required. So this is something that if you don't have, you've got to build into your team, because otherwise, for me at least, it's going to be very difficult to invest in you.
Right, and so that leads into a taxonomy I was taught many years ago by Randy Komisar at Kleiner Perkins. He was on my board of my last company. He said, look, there are three kinds of investors in this world, and as much as everyone tries to do all three pieces, natively you're one of the three. You're either a product picker, a market picker, or a people picker. And I think that taxonomy is so much more right than it's not. So you've heard my provocative statement. So if you come into my office and show me a product demo, how do you think I'm going to reply? On the other hand, you come in and show you a product demo, that's going to be exactly the right way. So the big piece of advice I can give is doing a little bit of homework on the nature of the person you're pitching is actually very easy to do. The vast majority of us blog about these things.
Well, what if I told you the opposite, and that I'm a product guy, and therefore don't tell me anything about the team? I don't want to hear anything about the team.
So, yeah, no, I've met that guy. Yeah.
Well, that's not, I just think it's wrong. I think that you can be the product guy and you can be the people guy, and still, if you don't look at it and say, "Wow, that looks like shit," and so it's the best people, but they're producing some horrible stuff, then it's another 10% of quality that you can get into it. I mean,
Yes, but the great people don't produce shit. They will eventually produce something that is great. I do look at
This
games.
is like a partner meeting, right? So we do this like every Monday. It's the same thing, But seriously, in venture, it's the same. It's like the people, the market, the product, and like the opportunity, the deal that you're investing in. It's the same. So some people are more focused on products, some are more on people, and you have these debates, and eventually you gotta trust the partnership and kiss and make up afterwards. It's like another big relationship you have in your life. It's
Absolutely. I mean, I think everyone has a slightly different take on this, but sort of the big takeaway is do a little bit of due diligence, right? I mean, investors like to talk in front of people. I don't know if you noticed. We like to get out there and talk about what we invest in and why we do it. It's how we get, more deal flow, right? That's how we learn about interesting studios. It is not hard to Google Phil and find out what his sort of working investment thesis is, more or less, right? It's not, same thing for us. It's very easy. And so many times, we'll get pitched I got pitched 2 weeks ago, a really seasoned game developer who's been in the business for a long time, was looking for a $10 million round. That's just not something we'd ever consider. And he just hadn't even thought that, oh, you know what, maybe I should do a little diligence, sort of the round size they look at. Whether or not you're a product picker, or a market picker, or a team picker, at some point, you do want to know who you're investing in, right? And you do want to have a sense of, whether or not they're in it, or they really have that burning entrepreneurial spirit. I'd be curious to hear different people's thoughts on the panel about how much sweat equity has gone into the product or studio that they're building before you would be willing to come on with a sort of an early stage bet on that studio. Do you feel like, you want to see that they've all quit jobs and have been working for 6 months on this thing unpaid, or what? I'm sure there's some varying opinions on this.
Yeah, let's probably start on that. So I don't have an iron rule for that. So I did very early stuff. Talking about Supercell, for example, it was not like directly after Clash of Clans for like 3 million valuation. They were doing a hardcore Facebook game called Gunshine that failed miserably, that nobody remembers. But they were a great team, and I was convinced that they would figure it out eventually and produce something that will be a success. For my personal flavor, I loved the game, the original one that they did. It was a failure nonetheless because my taste is not the market's, and that's totally fine. But in that case, I did a pure team invest because they would figure out eventually. They had decades of experience within their team, and they would turn it around. And it turned out to be a good success, very good success. That it would be one of that magnitude, nobody can predict that. But that it would be successful and I would earn money with it, that was pretty certain.
Oh,
In
okay.
others,
So fair point, and I think the team. I think most of us really value that. But very specifically, I'm asking how much equity, how much sweat do they have to put in on their own before you'd be willing to write that first check, right?
totally depends. Experience, product, what their vision is. So I did something, I did investments before the team even was formed. So I was basically enabling them to jump ship and build a team. I did investments where they had a game out in soft launch. I did investments where they had a whole portfolio of games out and they were doing well. It totally depends.
Okay, so you're not going to say no because none of these guys have built anything yet, right? If you believe that. Okay, Gigi?
Yeah, so again, I don't think there's a rule, especially today, but the two things that really get me as a negatives are teams that work in other places and say, if you give us the money, then we'll leave our jobs and we'll start a company. Because if you don't have that drive, that crazy desire to go out and create something, then you're just not the right entrepreneur. And, and it's perfectly fine because some people can't because of money, and some people just have to stay in their job, and that's fine. It means it's not the right time for them to be entrepreneurs. So that's one thing. The second thing is that I just can't stand it when teams have come to me and say, we've been working on this for 3-4 months, And then you say, great, what do you have to show? And they say, oh, we have nothing to show. We've been walking around, talking to investors, and preparing a presentation. And I'm like, well, 4 months, I mean, today in 4 months, you can prototype 10 different games. You can try them. You can have people say what they think. You can be, miles ahead. So if in 4 months you did nothing, you'd actually do nothing with my money as well. So these are the 2 red flags for me.
I echo what these guys said. And also, you have to know your investor. And for us, you have to put an enormous amount into it. And when I say an enormous amount into it in sweat equity and also your own money, what I mean is like everything you've done in your life up to that point, what have you done? And how has that led you to this manifest destiny of creating this company? And it might have been, working at a big publisher, or it might have been doing something, amazing at another startup. And then we'll fund it, and we'll be the first $500,000 to $2 million into it. But we want to see that whole story of why is it that we have faith in you to do this amazing thing. And usually it means that they've raised some amount from friends or from family, or they've bootstrapped it to a point where there's some kind of MVP or some kind of a beta, and they've proven that they can execute on something. There has to be something there. Otherwise, we're just going to say it's too early, come back later.
Yeah, it's pretty rare to find investors who will back teams just on an idea. Although you've got a bunch on this panel here, it's pretty rare actually. We've invested in 2 or 3 teams on just an idea. It was we invested in Jason Citrone when he was starting Hammer and Chisel. I think it was called Phoenix
Guild at the
Phoenix Guild at the time, yeah. And actually invested in Phoenix Labs when they spun out of Riot Games, a bunch of executives, and they didn't even know what they were going to do, but we felt their passion. They were effectively running League of Legends, and we believed in them and their success. And when you find people like that, we're willing to make that risk. It's rare though. Typically, if a team hasn't made it really big and they just have the idea, we're going to wait to see the beta and look at the ARPDAUs and retention rates and try to get a sense of those numbers to help mitigate our risk. I mean, like Clinton said, we see so many investment opportunities. We do try to mitigate the risk in a risky environment whenever we can. So, but we will do those. It's a rarity. And don't be afraid when you're pitching to toot your own horn. So many people who come in, they sort of gloss over their backgrounds. It's important to really talk about what you did at your prior companies and your prior experience, because we really want to know. And if you made money before, tell us exactly how much you made. I mean, don't be shy about that. We're going to ask.
Our fund is very specific. We only invest after product market fit. So we will not do any team investments. We will not do any investments pre-product. And this actually kind of makes sense. The weird guy who says he doesn't look at the product, well, how could he possibly have his strategy work? Well, only once the product's launched. And as a result,
it all falls together.
Right. This doesn't actually start sounding as weird as it sounds, because only once the derivative information is available, the ARPDAUs, the retentions, the sell-throughs, et cetera, then you have enough signal to be able to make a prediction about if this company is going to be successful over the next 12 to 18-month horizon, which is the horizon under which our fund invests. And so, if you have an idea on a piece of paper, I'm not your person. You have early fit and everyone else is going, come back with 6 months of data, that's when you come see me. I'm the guy who likes to take the risk for the next 6 to 12 months of data, because we've gotten very good at projecting across many categories what looks like a winner, extrapolating off the early data set. I would kind of describe that as the core competency of our fund.
And that explains why you don't play games.
And as I said, that explains why, why we investors want no risk.
So one of the things that we are pretty open about at Execution Labs is investing in multiple geographies. So we will do investments throughout North America, Western Europe. We've done some deals in Eastern Europe. But that's not altogether usual for a very early stage investor, because oftentimes we want to be very in the weeds, be able to sort of poke you in the studio. And I'm curious what other people think. Is geography ever sort of absolute no? I mean, obviously there's certain regions where you just won't enter, I'm sure. But just broadly speaking, is that something you consider?
I guess I'll start. We'll do a deal anywhere. Some of our best performing companies are very far from us. One's in Scotland, a bunch are in New York. I've got one in Chicago. I've got one down in Raleigh, Durham. Hell, I don't even live here. I live half the time here and half the time in Philly. And so I have found that over the past 5 years in particular, that the ability to be able to do the teleconference, the 2 a.m. phone calls, et cetera, is way more important than being able to go sit in the office. But remember, I'm investing after the product kind of works. I think the earlier stage the investor are, the more you're going to hear a divergent answer to this, because when you're looking at the whiteboard before it works, it is way more important to be able to sit in the office with the person. If it's after it works, all those traditional techniques for communication work really, really well. But man, when you're grabbing your ass in a dark room and finding a light switch, you want someone in the room with you, as opposed to, okay, it's 2 o'clock in the morning, I got to fire my sales guy, how do I do this? You know, that's a different kind of discussion.
Sure.
Yeah, we're investing all over the place. I was in Reykjavik on Thursday at QuizUp, and I've got investments in Helsinki, Vancouver in the gaming category, and I think you have to, given gaming's pretty broad in terms of where the teams are today. I think though, it's the bar is higher when you're not an hour drive away. It just is, and I think that it's true. Earlier stage, you need to be there. It's really important. I still feel that way with Series A and B investments as well, because just things happen and you got to grab a drink with an entrepreneur afterwards. I like to spend, a fair amount of time. We all do with our companies, and I like to be in person in front of them like once every 2 weeks if I can. But when they're in Helsinki, it's just harder, and you just see them less, and you just. It's colder. It's colder. Yeah, it's true. But Skype works. I mean, look, video calls are great, but it's not the same. So. It's just the bar is higher, and everybody just needs to know that.
Yeah, I think early stage investing is best done locally, and for the reasons that these guys said. But I think as an early stage investor and as former operators, you want to be as helpful as possible. I almost have an incredible sense of guilt that I'm not doing enough. I wake up in the morning and think to myself, what can I do more for my portfolio companies? And I want to be there close to them, helping out with hiring, with biz dev, with marketing, with PR, with building their team, with their product. And maybe that's just because I have an operator background at Square Enix, and I just felt like I'm not being useful if I'm not doing that.
Is that why your focus is, I think like you said half your studios are in sort of the LA area?
Yeah, so 50% of our investments are in the Southern California area in CrossCut Ventures. And then we have, I sit on the boards of 3 or 4 companies here in the Bay Area as well, because that's a quick, 1 hour plane ride for me. So, but as you get outside of that, I think that area, I get more and more uncomfortable because I'm not close to those investments.
I'm pretty much agnostic when it comes to geography, and that comes from the fact that I'm not a full-time investor, but I don't spend that much time with my companies anyhow. So I literally have an investment on every continent with the exception of Africa, and I don't mind that much because it's...
You've got some Antarctica?
New Zealand. I have one in New Zealand, so that counts as Oceania, whatever.
Antarctica, you got a penguin investment.
Sorry?
The studio in Antarctica, which one?
That's my question.
Is that a continent? That doesn't count, come on.
Now we're qualifying things, okay.
Whatever, okay, inhabited continent, with the exception of Africa. Let's go with that. That is just from the fact that I don't spend that much time on my investment. I have my own company to run. I'm there when they need something. I can make intros, I can invest in additional money, I can help them with operational stuff, I can judge product, but with a limited amount of time per investment when they really need me.
Okay, we'll let you answer this and then we'll open the floor to questions.
So just one short thing. So I totally agree with Phil about the higher bar when I invest far away from me, but I found that it's twofold. It's a higher bar on the quality of the team, and it's another higher bar on how familiar am I with their business. So I'm a lot more likely to invest in the kind of the core thing that I really know, I don't know, social casino or MMO strategy or real money gambling, the thing that I've done many times and I am hands-on with. Much easier for me to invest on that far away than on a new genre that I don't know or something that I feel that it's going to take me time to learn and that's going to be more difficult.
I'm going to open just with one question, if that's okay. So I've sold a couple game studios, web studios I founded over the years. I know Rick real well, so I'm part of Signia as an LP and an operating partner. So I kind of know some of you guys by name, have a lot of respect for you, by the way. I'd like to get your take. You know, when I have companies come to me asking for money, if they start off with the 1% argument, if we could just capture 1% of the market, these will be our numbers. That just turns me off completely. I want somebody who comes in to, quote Mark Andreessen, and lights the conference table on fire, right? How do you guys feel about that? Do you want realistic projections, or do you back them off yourselves?
It's impossible to project it, quite frankly. It's a hit-driven business in most areas. In some, it's not as much. But to project the success of a game when you don't have numbers and can really extrapolate early day mechanics or early day metrics, it's not doable.
Well, I mean, I'll just sort of be a contrarian here for once. I do think that for certain sort of maybe premium, more single player sort of experiences where there are comps, it's a little bit easier to at least show those numbers. I'm not saying I'm going to believe them, but I think that's where you might say, okay, well, Walking Dead did this, or this, this other license, whatever. But I agree, free to play, I agree much harder.
I'll just say my take on it is one thing, is that if you come with me without a reference, which means that you thought about it, then it's going to be difficult for me. So if you come to me with a genre that didn't have any game in the top 100 ever since mobile launched, right? You find the genre, and you don't come with this great explanation why it's not there, or what have you invented that's going to make it work. And so I'm going to look at it and say, okay, fine. I don't want you to replicate something that exists, but I want you to see that you're thinking about references. So this is what worked in general. These are the kind of emotions that drove people to spend money and to download things. So I now look at it, and here's my take on it. Here's my take on the same emotional elements that got people to play social casino or got people to play MMO strategy. And here's my take, which is different because it's got to be different. And I can see the references, right? It's not about 1%. It's not about I'm going to be like Clash of Clans and I only need to be 10% of their revenue to be a great company. It's not about that. But it's about understanding where you live.
And the platform businesses are where the advice ends up being more traditional. So if you're on the platform side, you have to not fail the IQ test on how you actually go to market with your product. So the 1% argument's always a turnoff, but if it's the beginning of a sentence which goes, here are the 3 strategies by which I'm going to achieve market share, 1, 2, 3, and they're well thought out, you feel very, very differently. Now, in a hit-driven, IP-based game side, it's less easy to predict, but you have a platform business providing, say, real money infrastructure to other games, and you've got to do a DevRel set of deals in order for it to work. Show me why you're going to be good at doing the DevRel deals to get to the user base that you want to. And I view that to be one of the most predictive aspects of the meeting with the entrepreneur if they've actually thought through what their go-to-market strategy is. I think most of the companies sink or swim on that particular piece of the puzzle.
Right, but that's not a games company.
All right, can we do another question here?
So just very briefly, if a studio has an investment proposal, what is your best advice for how they get that proposal to you where you actually spend some time looking at it? Is it through a referral from one of your peers, or typically, how do they get in your pipeline?
I mean,
that's an easy one.
Yeah.
I mean, the answer is always referrals, period. Nobody, if I just did an analysis of my portfolio over the years to make sure that why am I wasting all this time on the cold emails? And what I found out is that I've done 20% of my deals were cold emails only of more than 100 companies, but these 20% were like only 5% of the returns, right? So at the end of the day, referrals.
Does anyone have a different answer, or is everyone's in agreement on that one? Okay, so make sure you get a warm.
Actually, I'm going to give you the opposite.
Okay, Paul, I'm shocked.
Let me tell you, you get the idea. I run a very contrarian fund. I like to get direct references. Let me tell you why. Because lots of times our companies, the insiders are trying to jam money into the company without doing an outside bidding process and evaluation. And the CEO mails me and goes, my company has the insiders think that this is a winner and they're trying to jam $1 million in at an inside set price. I think that's kind of a little bit of bullshit. I should talk to somebody like you to potentially price this round instead. Some of my absolute best deals were cold emails directly from the CEO with that fact pattern. So that's a very unique, specific fact pattern, but when you play the post-seed game after the seed round but before the A, right, you end up with this very specific kind of signaling. And 2 or 3 of our earliest exits were exactly that fact pattern.
Okay, fair point, but sort of noting your very specific location within the funding dynamics.
Hey, my name is Peter from Infinity Plus 2. I just want to say thanks for all the risks that you've taken and the investments you've made into the industry. You've been able to create some incredible companies and products. I want to go back to one item that Paul mentioned in regards to not looking at the product. Now, my question for you guys is, what risk is there having a close look at the product to want to influence the product as an outcome when you've got a creative team that understands and the industry understands their product, and they feel that if someone, an investor in particular, comes in and requests changes, what are your thoughts on that kind of behavior?
When an investor does that, he shouldn't invest in companies, he should build games. It's not our job, quite frankly. And even from a publisher's point of view, where we actually make games, the creative control has to be with the developer. End of story.
I don't know. You know, this isn't a game, but with Pandora, we did the Series A when I was at Walden, and they were in a complete different business. We loved the team, we loved the category. We said, you know what? The investors said, we said, you should move out of a B2B business and become a B2C company, and we shifted. So sometimes investors can play a big role because we've been doing this for 20 years. We've seen a lot of patterns, seen a lot of successes over time. Ultimately, we're not running the company, right? But when you're on the board, you're part of the team, and it depends. If you're an investor who wants a very hands-off approach to an investor, you can get that. I don't think that works in the long run, but you know, if you've got a partner who understands your business and you want to work with them in that type of collaboration, which can work in that instance, then you own up to that,
Yeah.
and you work with them.
I think that's right. I think some of the best CEOs really listen, and they look for tough love in their investors too. And I think they look for informed opinions from their investors. And I think the best investors have some kind of operational background as well and can understand what it is that they're investing in. And if you're a CEO of a company and you see this product and it's failing or it's not course correcting the right way, you can go to your board and you can be honest with them. You can ask them what is it that they should do, and they might have some answers for you.
Okay.
Great.
Have fun.
Thanks, guys, for a great panel. Quick question about crowdfunding from an independent studio. Would you invest in an independent studio that had a successful crowdfunding campaign?
I mean, I can take this one, I guess. So we have, and we've also invested in studios that have had failed crowdfunding campaigns. I mean, this is, you know, sort of, I think our opinion, execution labs. Crowdfunding as a means of financing your game studio, it's really a pretty shitty way to raise money for a game studio, and it's getting worse and worse and worse. We will look at crowdfunding as sort of one sort of measuring stick for how you're likely to achieve product market fit, right? And if your response is favorable there, that does weigh in our decision, but just because you failed or whatever doesn't necessarily mean we won't take a look. I don't know if anyone else has anything to add about crowdfunding.
So we're an investor in Indiegogo also, just for full disclosure, but a lot of our companies have used crowdfunding just to build up grassroots communications around the game and build its support. So that's usually when they do it. If it's a sole reason, the sole way to do it, it's sort of a last resort, I would say.
Is having a large cap strategic a plus or a minus or a neutral to you guys as financial investors? In the Series A, to be specific.
Series A investors?
You definitely got to hop in on this, but I would say the advice on that has changed markedly over the last decade. 10 years ago, that used to be an absolute no-no in almost every category of company across the board, because they felt that you'd be a captured entity, you'd have exit options, a call on the company, etc. But increasingly, as it's become so cheap to get through the early stages of product market fit, having strategics at the table who have helped you get past some distribution hurdle, etc. So I've seen way fewer deals now where it was, oh my God, a strategic was in the A, I can't do that deal. Whereas 10 years ago, the company wouldn't even get looked at by the financial investors.
It depends on the size of the stake, I guess. I mean, if it's like 2, 3, 5, 10%, but if it's like 30, you probably wouldn't invest.
It's becoming a lot more common as the venture market gets better. A lot of strategics come in, so it's not seen as a negative. We're actually not a strategic fund. We have a strategic LP, yeah. But all our companies get $1 million of free media spend throughout the IDG network, so they use it for impressions, and then IDG runs E3, so they get all these discounts there and free stuff. But I've seen strategics kill companies before. That's more but it's actually not that bad right now, so it's sort of cyclical.
Yeah, and not all strategics are the same. I mean, and some can create an unfair advantage for you. And if that's the case, then I'll invest with them, and we have invested with strategics before, where we think it's in the best interest of the company. So it's just it's gonna depend.
Okay, everyone, thank you for your answers. If there's one thing for you to take away, is that even investors who are active in the space disagree on a lot of the criteria for how we invest in studios. So just because one says no doesn't mean someone else won't say yes. So thank you for your time. Thank you especially to our panelists. You guys were fantastic. Stick around for the next session.